Excuse me, guys. Whoa, I'm so sorry about that. I'm sure you guys heard that. Well, welcome back. All right, I'm happy to be back. All right. Unfortunately, today I do have a commitment that I have to, be available for. So this stream is actually starting about an hour earlier than I would normally start. And I might get a text message here probably in the next 45 minutes that says, hey, cut it, and I got to get going. We had so much happening. So yesterday, I really wanted to watch the State of the Union address by President Trump to just see what he had to say about, data centers and the stock market. Honestly, it was probably like a 10-second, 15-second, segment of that entire 2.5-hour speech or whatever it was, hour and a half, I think. Either way, as far as the stock market, him covering the stock market and talking about it, there really wasn't a whole lot. Let me just share this post real fast and then we'll get going. Either way, as far as the stock market, him covering the stock market. Yeah, with X, I have to actually post the stream. I can't just I can't just covering the stock market. Oh my goodness. Okay. Anyways, like I was saying, so I wanted to cover that because that stuff was hopefully going to give us kind of a light into what the administration is focusing on. And not only that, but hopefully he was going to give us some more insight about kind of just a general direction of the administration and what their focus is. He did not mention really much of anything, at least that I haven't heard anything regarding, China, rare earth metals, critical minerals, or any of that stuff. So he didn't mention anything in the commodity space. He did mention we're winning way too much, which is an absolute joke. But I wanted to at least hear the State of the Union to at least get get some points in, right? At least understand what's going on. So, all right, guys, let's get into it. First thing first. All right, we're gonna cover. Let's see, where is it? Oh no, I totally deleted it. Oh, here it is. From the Kobesi letter. All right. Hope you guys enjoy all the winning.
Our country is winning again. In fact, we're winning so much that we really don't know what to do about it. People are asking me, please, 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 Mr. President, we're winning too much. We can't take it anymore. We're not used to winning in our country. Until you came along, we're just always losing, but now we're winning too much. And I say, no, 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 you're going to win again. You're going to win big. You're going to win bigger than ever. And to prove that point, here with us tonight is a group of winners.
Shit. Oh, there we go. Anyways, sorry guys, I'm all over the place right now. But anyways, we had Fat JD Vance in the background saying buy Bitcoin. Right, the last day, absolutely crazy. Right, we saw Bitcoin just spike up like crazy, and we think we're on our way back up. Maybe we finally bottomed. I don't think so. I think I still think we have a ways to go. We're gonna have some type of a pullback here. But anyways, we're winning too much, guys. We are winning absolutely way too much. All right. And you guys can just look at the stock market and feel it, right? But anyways, guys, let me check the chats real quick. All right. So we got Sean. Hey, welcome, Sean. Let's see. Throwing up all over the place. We got Wolf. Guess you're not a fan. I think he's replying to someone else. Let's see. Straight guy, hey, welcome back. I need a lasagna, I think is what you mean. But yeah, I'm still like getting over, I guess, the cough or whatever it is. It's just a little bit of gunk up in there, but overall, I'm feeling better. Let's see. So I apologize for the sound bit. Let's see what we got here. He did mention that he's going to try to get the hyperscalers to pay for their own electricity for artificial intelligence. He did mention that in the data center piece. I will be covering that here in this stream. Let's see. From Padre, he says, still thinking after hours drinks thing would be cool. Sips and dips, the unprofessional after hours. Man, I got to be careful, man, because one thing, it's early in the morning over here, right? It's early in the morning over here. I can't be starting the day off feeling all buzzy. So let's see. I like this from Dividend Sith. Hey, welcome back, man. You think darkness is your ally? I was born in it, molded by it. Absolutely. You think red is your ally? That's what we should be saying right now. You think red is your ally? I'm literally swimming in red over here. All right. They say buy, you know, when what is it? When there's blood in the streets, buy even if it's your own. Well, I'm picking up my blood by the gallons at this point. All right, guys. Just wanted to show that clip because I thought it was funny. I couldn't stop geeking out through most of the speech because, you know, Trump is just off the rails sometimes. But I thought this picture was hilarious. Okay, S&P 500, what are we looking at here? Well, over today, we're up almost a full percentage point, 81 basis points in the green. All right, again, we had a really nice bounce to the upside. Don't know if we're going to continue. I really believe this had everything to do with Nvidia earnings. There was a paper that came out, and again, I could not get find the link in time, and I'm going through my news feeds. But what caused the entire market to sell off, basically, at least the software side, was a paper that came out from basically a fund, and it was basically talking about the bear case against AI. What if AI replaced, white collar jobs, right? Basically your accounting, your office type of work, because that's the American economy right there. And that promptly sold all of SaaS off, right? That pretty much had or caused a big SaaS sell-off. But again, today it looks like we're looking pretty good. And it looks like things had recovered. All right. The iShares IGV, which is the expanded tech software ETF, which is down close to 30%, is actually up 3.11% today. So we had a pretty decent break to the upside. Looks like maybe we finally bottomed. All right. I don't want to call it. I'm not saying we did bottom, but I'm just saying, there is a lot of people out there that believe we finally might have been bottoming. Over the last couple of days, for IGV, there's a lot of inflows, all right, a lot of volume for IGV. So that is a bullish signal, right? That's what people are believing is a bullish signal for the software sector to come roaring back. It is one of the most beaten down sectors of all sectors in the S&P 500. All right, let's see. We got a bunch of comments over here. I want to try to get to a couple. And as always, I appreciate you guys when you join me for these streams. Let's see. I didn't see gains until I was already a man. Oh man. Padre says, I mean, when it's late for you. I don't know. Maybe one day we'll do a sips and drink. Maybe it'll have to be on a weekend though, right? Maybe we'll do an after hours show or something, after dark or something. I don't know. We'll figure something out. Let's see. Dividend Sith says, I have no Bitcoin or Bitcoin related stocks or ETFs. Man, you're one of the very few people I know. There's a few in the Discord that have all flocked to all commodities, all metals. They're staying away from anything in the equities market or anything in the crypto market. So you guys are out there, and then of course you have Padre in the chat who's all commodities. But I'm pretty sure he has like a freaking $500,000 position in Tesla or something that he's not sharing. The paper, yes, the paper was Centrennial. I don't know if it was Centrennial. I think it started with a C though. I remember, but yeah, it's something like that. They basically published a paper, and that it was a bear case against artificial intelligence, basically stating, a dystopian world where all the white collar jobs are going away because of AI. And even though productivity is going up for these companies, the jobs market will crack. And if you don't have people working, you have no one working, right? You have mass layoffs. You have people on what is it? I forget the damn thing that the state governments usually offer. But it's basically when you don't have a job and you can still at least get some type of income. I forget it. But anyways, let's see. Super Straight Guy says, selling my baby in when I get my cost near $44. He's talking about BTCI. And then Dividend Sith says GLD, GDX, Goog, SMH, and DGRO. That's a nice lineup. All right, guys, let's continue on here. Gold. All right, gold didn't really do too much today. It looks like some of the stuff that was happening, over the last week, in relations to the conflict in the Middle East, and then the conflict down south in South America, it's kind of just taking a backseat for right now, especially in Mexico being so close to the United States. That has taken a backseat. There's still a lot of residual after effects coming about. You still have some uncertainty, some geopolitical risk, right? We'll see what happens with the cartels and what they will do. Because again, whenever there's uncertainty and unrest and things like that, usually gold will do well. All right. But we actually had silver that popped up. Silver was up 1.21% today. It had a really, really nice climb up, and then it just dropped. But it did have a really nice climb up. Again, it looks like it's starting to make its climb back to the old all-time highs, or the old highs. Just for over the past 5 days, it's up 13.42% over the last month. It's still down 18% year to date. It's up 21%. Going back to gold, year to date up 18.87%. Year to date for the software sector down 21%, and the S&P 500 up just 1.28%. There was a ETF, EWY, and I meant to cover this a while ago, but this is the Korea ETF. Okay, this is specifically for Korea. Year to date up 45%. All right. Up 45%. So when we had the working investor on a couple of weeks ago, or a week or two ago, whatever it was, he was making the case for having international exposure, right? And when you have a gain like this, it is pretty nice. But then, just so you guys know, if you actually look at what's in this ETF, and you're saying to yourself, oh man, this is like the S&P 500. Well, you would be kidding yourself, because this is South Korea's market ETF. But if you look at the top two holdings, what do you guys see? SK Hynix and Samsung Electronics. And guess what they're weighting? Look at those weightings right there. 28% and 19%, right? Basically almost, half the damn ETF is just in two stocks. That's Samsung Electronics and SK Hynix. SK Hynix is a memory manufacturer similar to Micron. And then you have Samsung Electronics, of course, right? Samsung makes, cell phones, they make TVs, but they also make memory as well. So people are getting hyped about this. But again, for me personally, even though that's really, really attractive, I mean, you had SK Hynix up 100 and something percent, or more than that, actually. I think it was like, I forget. It was something crazy. But anyways, you had Samsung Electronics, SK Hynix making up almost half of this ETF. If there's any type of disruption, correction, or sell off for these two stocks, this ETF is going to go spiraling down. But that's the story behind SK Hynix, and the story behind Samsung Electronics, and the story behind Micron MU is that there's not enough memory production. They're already fully booked for the next year, right? They're fully booked for this year, not the next year, but they're fully booked for this year. All of their chip, distribution, manufacturing has already been, bought and paid for by these other companies, right? Nvidia, AMD, the semiconductors. So those three companies are the only companies that I know of that make specialty DRAM, or that make DRAM for all of these AI chip manufacturers, semiconductor companies. So that's why their stock price has appreciated so much. But I wanted to cover that because that was making its way in the YouTube X space. And I think it is interesting to get exposure, or at least to see what other ETFs internationally are doing. I think the Venezuela ETF was also doing really well. I haven't looked at that in some time. If we look at Bitcoin, all right, Bitcoin's finally having a decent climb up. All right, maybe we'll breach 70K. Hopefully we do, because then we can continue to climb higher. If we don't, we're gonna definitely bounce back. We're definitely gonna go back down. All right. Over the last 5 days, you guys could see here. All right, this was a huge sell-off. Down 6, almost 7%. And then we just had this crazy run up, right? This crazy run up this week, and we're back up. So maybe the bottom was, there's some talks out there that maybe the bottom was already at 64 or 62, whatever it was. This chart doesn't really show, but I think it was like a little over 60. Some are saying that is possible, that was the bottom, and then now we're going to have this shoot up to about 85, and we'll have to see what happens once we get to the 85 range, right? Or at least above 80. No, I have no idea. I'm not a chartist. I'm not a technical analyst type of guy. All right. I don't know that stuff, but I'm just kind of parroting what I'm hearing out there on not just X, but YouTube as well. All right. Or just social media in general, YouTube, X, Instagram, whatever. Right. So just wanted to cover that. Skeptic says you just anti-international. I definitely am, and I think it's a bias that I need to get rid of. I think I should be open to more international. I just don't want to because, yeah, there's this nice rotation to international, but I just, it might do good 1 year or 2 years, but is it going to do good, as a buy and hold? But, maybe you can swing it for 1 year, 2 years. I don't know. Right. For me personally, I don't want to get any exposure to international. I did for a brief moment think like, man, it would be nice to get that South Korea ETF. Right. But I don't know, guys. I don't think it's for me. I don't think I can keep up with what's happening in South Korea. And I'm not going to be looking at South Korea all that much. Plus, that ETF is tied to two stocks, SK Hynix and Samsung. Right. Those are two biggest money makers in that country. If they were to fall for any reason, right. Maybe we have an IPO by a fourth and a fifth, a company that comes out on the scene and starts making DRAM like it's going out of style. Right. They're just able to mass produce these things like gerbils or hamsters. So I'm just worried about that is all. Let's see. All right, cool. Frankiezy, I do see your comment. Unfortunately, I don't do that anymore. It's just not something I'm interested in. I won't show the comment, but it's just something I'm not interested in. But I do appreciate the comment and you reaching out. All right, moving on. Okay, we have from RexShares launching tomorrow. And like I said in the Discord, I really think that this was a missed opportunity here to name it something much cooler. But we have RexShares dropping a new ETF. All right, the Rex Growth and Income Universe ETF, or GIF. All right, and basically this is just going to be a basket of like any other basket. It's going to hold all of the funds from the Rex Income and Growth ETF side of house, right? Excuse me. So we can go to RexShares real fast. And whenever you think of like a WPay, that's exactly what this is going to be, right? It's just going to be a bundle of all of their income ETFs. Let's see if we can find it here. Boom. Yeah. So their GIF or GIF, whatever you want to call it, growth and income ETFs, right? That's what they're naming it after. It's going to have this basket. So if you like the underlyings, well, if you like the strategies and then you like the underlyings, then this could be a potential ETF for your portfolio, right? So we'll have to see what kind of distributions it does or has. But for those who may not be aware of what these are, so these are growth and income ETFs. They do 50% leverage, so up to 150, it's 105 to 150% leverage on the underlier, and they do a cover call strategy. So that is how they generate the income, right? So it's not just you're not getting capped upside with the Rex paying or the Rex growth and income ETFs. You're actually getting some appreciation as well, like some real appreciation. It's not just going to erode down to zero. Now we have Coinbase in here, MicroStrategy, Nvidia, Tesla, Robinhood, Palantir, CoreWeave, Eli Lilly, and Walmart. So still a very small, basket of stocks or ETFs that are going to be in this, this new GIF. So we'll have to see if they're going to come out with some new products. 9 ETFs is pretty good. Don't get me wrong. I think this would be good if you don't want to pick and choose, and if you like the strategy. Okay, if you like the strategy that Rex has for their own individual ETFs, right? Again, half of it is 50% leverage. Right here, we could see that. Half of the ETF is in leverage, and the other half is doing cover call strategy. Okay, so that is what is attractive about these. They've done pretty well if you compare these with some of the Roundhill funds. They've actually outperformed on most of them. To be honest, they've actually outperformed them. Even in a down market, they've outperformed them. So it could be, again, something attractive for some other type of investor. Me personally, I will not be initiating any position in these. I thought about it in the past, getting rid of, PLTW and VDW and HOW in favor of the Rex Income growth and income ETFs. It's just I never pulled the trigger. I opted against it because, again, just for me, that 150% leverage is something I don't like, and the daily reset of that of that leverage is not something I like. But who knows? Maybe people will really like this. Okay, so just wanted to cover this product. Let's see. We also have XFUNDS finally dropping their 2 ETFs. Okay, these were stalled out, and I know we already covered them, but they were stalled out, and now they're dropping here next week, it looks like. Okay, so you have XFUNDS. All right, we kind of already covered them, but you have Nuke X or Nukes, whatever. Skeptic, I know he said that. We also have Weapon, okay, the nuclear income ETF, and then you have the defense and rare earth income ETF. Okay, so these will be dropping next week. So XFUNDS had put these on pause for a little while because the market maker that had the shares, I guess they didn't have enough of them or something to that effect. So they actually had to pause these funds, but they provided an update that these will be trading soon, and they'll be trading on March 3rd. All right, so something to keep a lookout if you're interested in those 2 thematic type of ETFs. Moving on, we have from YIELDMAX, and I don't know how I feel about these ones. All right, from YIELDMAX. Again, now we have thematic cover call ETFs coming out. I don't know how I feel about this, but we have a couple from YIELDMAX, War Tech and Cyber Defense Portfolio Option Income ETF. We have the Strategic Metals and Mining Portfolio Option Income ETF. We covered mining already. Then you have Kashi, which is the digital finance ecosystem, portfolio option income, and then Roby, which I guess is the Robotech and Automation Portfolio Option Income ETFs. So you have a couple new ETFs coming out from some of these fund managers. I'm not excited about any of them, to be perfectly honest. It's not that I hate them or anything, or I don't like the fund managers. It's just not something I want to purchase into. But if you want a thematic cover call based, income based ETF, some of these could be attractive. They're GDXY, I think is the ETF, is still doing very well, and that was kind of more of their old vanilla cover call ETFs. But again, gold has just been doing really well, and GDX by extension has been doing really well. Same thing for Chippy, although Chippy is a completely different strategy. The underliers are, you have a basket of underliers, not just single stocks. So this is why I think, maybe something like these are going to follow in, the Chippy, type of footsteps. As long as the underliers are doing well and moving up and to the right, then these ETFs could be do very well. But again, I don't know. When it comes to thematic ETFs, I'm always kind of hesitant, because when it comes to thematic ETFs, the ETF is only as good as the manager's picks, right? Where Chippy, they bought the whole sector, right? They have the whole sector of semiconductor stocks. I mean, there's not that many of them, right? SMH only has, I think, 45 holdings. A couple other ETF, or maybe it's 25, and Chippy has 25, right? You have also a couple others out there, and they have less than 100. So even for those sector-based semiconductor ETFs, there's not a whole lot. So but again, they're buying the whole sector. If you're looking at, strategic metals and mining, I mean, what are they going to be holding, right? Same thing for digital finance ecosystem. I think this is, I hate to say it, but I think this is a fad, right? I don't know. I wouldn't put my money in something like this personally, not because I don't like YIELDMAX or anything. I'm just not a fan of something like this. I mean, Roundhill has a bunch of them too. They have chat. They have a robotics ETF and stuff like that. I don't touch those at all either. I mean, when it comes to thematic ETFs, again, the ETF is only as good as the manager's picks. And I just don't want them, because, I mean, they might not be good at all, right? Okay, so I wanted to cover those. Let's see what we have here. Okay, we have from Sean saying Chippy and Soxy are winning too much. They are winning too much. Man, let's play that clip one more time, guys.
Our country is winning again. In fact, we're winning so much that we really don't know what to do about it. People are asking me, please, 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 Mr. President, we're winning too much. We can't take it anymore. We're not used to winning in our country. Until you came along, we're just always losing.
All right, enough of that. Yeah. So anyways, going back to this. Yeah. I don't know if I'll be opening any positions with these. Again, I don't want a portfolio of 100 ETFs. We have R14 real anxious for the XFUNDS to release. I think a lot of people have been really hyped about those from what I've seen. Some people are really excited about the weapon one. So we'll see, what the AUM looks like once they are launched and give them some time to season, right? Maybe about maybe a week or so, a couple weeks. Let's see. So from Screeching Possum, no matter the performance, they still managed to nab GIF as a ticker. Man, that's what I was saying. Like they took GIF as a ticker. Like that to me is very memey. Like of all the tickers they could have went with, they could have went with Rex U. They could have went with T-Rex. They could have went with Rex P. Anything. They could have went with anything with Rex in it, and instead they went with GIF. Of all the free, of all of the damn thing, they could have went with Rexy, right? REXI. They could have went with Rexy. But they went with GIF. Like, it's just weird. Like, come on, guys. He also says, I think the fund of funds concept isn't doing too well. Oh, I mean, yeah, I know. I think the fund of funds makes sense if you're an investor and you don't want to pick and choose the individuals and you like the strategy, you like the underliers, right? You like the picks. I think, that's where an investor would probably pick something like a basket, like a W pay or a top W whenever it changes. I'm excited for those changes. I'll say that. I'm very excited for those changes. A market cap weighted approach only for the top 25 stocks, in that portfolio. So they're going to pretty much kick out Coinbase and MSTW. So, and ARM, actually. I think ARM's also getting kicked out. So that'll, in my opinion, probably do better for WPay. It'll be like a true index at that point. But we will see. We had gotten to HOI early into launch. Terrible timing. And I should have gone with their Walmart fund. Excuse me, guys. I apologize for that. Let's see. Guys, you need to look at some of these tickers right here, man. So many semiconductor stocks are still overlooked. AAOI, Atom, and AXTI. I think we talked about AXTI, Padre. But yes, AXTI, if I remember if that's the correct stock, it did look really, really interesting. Skeptic says fund of funds is doing just fine. It's just ultra yield ones. That is a fact. Rexy would have made sense. Even those funds have. Yeah, that's what I'm saying. Like Rexy would have been perfect, but they went with GIF. Like come on, guys. That was lame. Anyways, all right, let's move on. Instead of me ranting on and on about this ticker over here. Where else we have? Okay, this is huge news right here, guys. Really, really big news. Okay, Jane Street. This is a institution out there. They've been pretty much they're being sued for insider trading for the collapse of Terraform. If you guys remember, it was some years ago when Terra, the stable coin, right? That was what it was. It basically collapsed, and there's talks out there that this collapse had also led to FTX's collapse, which is wild, right? So I'm going to just pull up a summary here. So a bankruptcy administrator for Terraform Labs, the firm behind the 2022 Terra USD Luna collapse, filed a 2026 lawsuit against Jane Street, accusing the trading giant of insider trading tied to the meltdown. The Terra collapse wiped out $40 billion and helped trigger a broader crypto winter and cascading failures, including FTX. If you guys remember FTX, Sam Bankman-Fried, that whole debacle, that whole fiasco, and basically that was a true Ponzi scheme. Yet the core allegations is that the complaint claims that Jane Street used material, non-public information about Terraform's liquidity moves and weaknesses to position trades ahead of the market. Specifically, the suit says that Jane Street front-ran liquidity withdrawals and other internal actions by Terraform. They executed trades that allegedly allowed it to exit exposure and profit just hours before the ecosystem collapsed. This is just more proof that, we as market participants don't really, we're always getting played by the big guys. We're always getting played by the institutions, by the big banks, right? We saw that especially with silver. All right. We saw that with silver happen. And that's recent. That's really recent. All right. The trades were described as impossible to make without insider information. All right. The key event was highlighted after Terraform removed a large amount of UST, U.S. Treasuries, liquidity from a curve pool. A wallet allegedly linked to Jane Street withdrew additional liquidity minutes later, framed as a turning point for market confidence. All right. So when Terraform removed a bunch of treasuries, right, it obviously brought it down, and then, or brought the liquidity pool down. And then Jane Street saw that and they went in and then took out the rest, I guess, is what it looks like. And that's what started the domino effect. That's what started the collapse. All right. So this is a huge deal. All right. They pretty much removed all of their posts from X. Their X platform is basically defunct at this point. And this is a big deal because this shows that market makers, right? This shows that not only that, but the institutions are absolutely sidious, and they're absolutely just rigging the system against us, right? They're rigging the system against us. They are notorious. Jane Street is notorious for that. They call it the amateur hour. In the first hour of, or the first 2 hours of the market open from 9:30 to usually about 11:30, you see that dump, right? You see that market volatility either just keep dumping or they'll pump up, whatever, right? That's usually people like Jane Street, right? That's people like Jane Street just manipulating the hell out of the market, using retail as exit liquidity, because you have a lot of retail traders hopping into the market in the early minutes of the market open, right? So they end up becoming exit liquidity. Man, I have Screeching Possum up on here. Let me get rid of that. Okay, so that was the big news, right? That was the big news that I came across. We'll see what happens to them if they actually lose this lawsuit. I did see that. You saw they halted the precious metals and nat gas today, right? Yep. CME, the CME was a Chicago mercantile exchange or whatever it was. They paused it again, right? They paused the precious metal stuff and they blamed it on a technical glitch, right? We saw this happen not too long ago with Cyrus One. You know, their data centers had a glitch or so, overheating or something like that. So we saw that. So now this happened yet again, and it's probably, in my opinion, market manipulation again. Didn't SBF used to work for Jane Street? That's an interesting question. I don't know. I feel like he maybe is his girlfriend. Let's see. Sam Bankman freed Jane Street. Let's see if he worked there. Oh, yeah, he did work there. In September of 2017, Bankman Fried left Jane Street and moved to Berkeley, California. Wait, what? Left Jane Street and moved to Berkeley, California, where he worked briefly at the Center for Effective Altruism, CEA. Man, having your boys be the reason why your company collapsed and you ended up in jail. Man, talk about the ultimate betrayal. That is crazy. Yeah, that's insane, man. Let me see if I can find an article for that. I'm getting way off topic, but this seems interesting. Let's see. CME halted. Let's see, news, I guess. Yeah, so unfortunately I don't have. Yeah, unfortunately, oh, come on. Bloomberg, you're killing me over here. Is this it right here? Okay, maybe we can use this one. Yeah, so this came up as soon as these ads get out the way. CME Group reopens Globex Metals natural gas trading after brief technical halt. So real quickly, the CME Group reopened trading in its Globex Metals and natural gas futures and options market on Wednesday after a brief halt due to technical issues. Earlier in the day, the CME Globex Metals and natural gas futures in the options markets were halted at 12:15 p.m. due to a technical issue. Natural gas futures and options markets reopened at 12:50. So that's, let's see, well over an hour, and not an hour, 35 minutes. Metals markets reopened at 1:45. CT CME said in an emailed statement. So that allowed some of the insiders to probably do some illegal things. Anyways, guys, let's move on from that. So Nvidia had their earnings. So let's see real quick. 8:34. So I should be good for another couple of minutes here. Okay, so Nvidia pops Q4 results. Guys, blow past Wall Street's forecast. So maybe Nvidia was the one that saved the market today. It wouldn't be the first time. All right. Nvidia shares rose 3% extended trading on Wednesday after the semiconductor giant reported fiscal fourth quarter results and guidance that topped below Wall Street's forecast by a wide margin. All right, data center revenue flew past expectations, coming in at $62 billion compared to the estimates of $60 billion. So that's a beat by about $2 billion. Automotive revenue for the period clocked in at $604 million, while professional visualization revenue rose 74% year over year to $1.3 billion. Gaming revenue for the period was $3.7 billion, up 48% year over year, but below the $4 billion estimate. All right, so they miss on the gaming revenue. But again, I don't think that's their big money maker, or it's not going to be their big money maker. Their big money maker is, of course, going to be the data center stuff. But it looks like, let's see, the gaming revenue is actually more than their other revenue, which is the automotive section, or automotive section, I suppose. Computing demand is growing exponentially. The agentic AI inflection point has arrived. This is Jensen Huang talking. Grace Blackwell with NVLink is the king of inference today, delivering an order of magnitude lower cost per token, and Vera Rubin will extend that leadership even further, said Jensen Huang, founder and CEO of Nvidia, in a statement. Enterprise adoption of agents is skyrocketing. Our customers are racing to invest in AI compute, the factories powering the AI industrial revolution and their future growth. Looking ahead to the fiscal first quarter, Nvidia expects revenue to be $78 billion plus or minus 2%. The company also said that it does not expect any revenue from China for the period. So this is all ex-China, and Nvidia is still crushing it. Analysts had expected the company to generate $72.78 billion in revenue. So Nvidia had a great earnings. We saw that the stock price rose. I think it just pretty much boosted the entire market. The AI talk of the bubble and everything else, I think that's all pretty much going to die. It's going to go out. It's going to die. We're going to stop hearing about this over the next coming months. At least I really do think so. It was good. We saw that there's a huge market rotation away from software, away from the semiconductor space. I still think, we're going to stop hearing about all of this, the circular financing, the bear case, and we're going to stop hearing about it. Yes. Nvidia to 10 trillion by 2030. That's what I'm talking about. All right, cool. Heading, let's see, Microsoft, Amazon, Google, among tech titans planning to provide power for data centers. So this was part of Trump's State of the Union address. And again, he only covered it very briefly. He only talked about it for, like I said, like about 15, 30 seconds. It wasn't really a whole segment. But this is a big deal, because this is one of the reasons why states and locales, communities don't want data centers. They're going to start, charging more for electricity. The power companies, that is, they're going to start charging more for electricity, and that's going to be, pressure on just everyday Americans, right? Just the regular household. They're going to see their energy costs go up, right? So that was the biggest reason why these people did not want data centers in their backyards. Not only that, but there's also talks, the reason that they don't want them, especially for water, right? Because water costs are also going to go up. So I think that's going to be the next hurdle, especially for data centers that use water for cooling. Microsoft, Amazon, Google, Oracle, and XAI and OpenAI are all expected to meet with U.S. President Donald Trump and establish a plan to generate their own electricity for their power-hungry data centers. So now you're going to have power centers, power generators on site for the data centers. So there won't be some type of hamper against the U.S. consumer. But again, none of this is finalized, right? This is still the early talks. So we'll see what happens to it and what comes from it. But I think this is a smart move, not only by the Trump administration, because you don't want energy costs to continue, even though you want to win this AI race with China. China has an overabundance of electricity, and they're building data centers like it's going out of style, right? They have way more power than the United States does. I think this is a good step in the right direction, at least for, data centers to start producing their own power. So it won't put an additional cost on U.S. consumers. And of course, you're playing into the bigger kind of domestic politics, right? You still have midterms coming up. So major tech companies will join President Trump at the White House next week to formally sign the Ratepayer Protection Pledge that he announced during his historic State of the Union address. The White House said Under this bold initiative, these massive companies will build, bring, or buy their own power supply for new AI data centers, ensuring that Americans' electricity bills will not increase as demand grows. We're telling the major tech companies that they have the obligation to provide for their own power needs. We have an old grid. It could never handle the kind of numbers, the amount of electricity that's needed. So I'm telling them that they could build their own plant. They're going to produce their own electricity. Last month, Microsoft revealed a plan to ensure their data centers don't increase consumer electricity prices and minimize water use and replenish more of the water that they use, or more than they use. The U.S. Department of Energy estimates that data centers will consume at least 12% of all electricity in the country by 2028. That is a very crazy statistic to know that data centers just by themselves are going to consume 12% of U.S. electricity, U.S. produced energy. Absolutely insane. Just checking the chat real quick. We can take a look here in a second. Let's see. There's already water shortages because of data centers, says R14 Real. All right, moving on. So we have AMD to deploy up to 6 gigawatts of AI chips for Meta's AI infrastructure. Excuse me. This news came out. Advanced Micro Devices, or AMD, is collaborating with Meta Platforms to deploy up to 6 gigawatts of AMD Instinct chips to power Meta's next generation of AI infrastructure. So shout out to all of you AMD holders. I'm sure we had a nice pump up on the stock. It doesn't look like we did. Let's see. It does look like we did, actually. Yeah, I mean, AMD is doing really well. You know, these companies said the multi-generation agreement expands their existing strategic partnership and aligns roadmaps across silicon systems and software to deliver AI platforms purpose-built for Meta's workloads. All right, under the agreement, AMD has issued Meta a performance-based warrant for up to 160 million AMD common shares, structured to vest as specific milestones associated with the Instinct GPU shipments are achieved. All right, so we've seen this in the past where AMD will just, you know, I don't want to say give away, but yeah, basically give away. They're giving away their common stock in order to make these deals happen, right? But that's only if certain thresholds are met. You know, for AMD, they have to ship a certain amount of GPUs in order to get that Meta to buy their shares, right? So that's essentially what I believe the warrants work. I'm not, you know, 100% you know, sure how you know, common stock and warrants are made. What I think is happening here is that when Meta, you know, Meta will invest with AMD, and the way they do that is AMD will have to ship a certain amount of chips, and then Meta will buy those common stocks, right? Will buy those common shares from AMD. At least that's what I think in a nutshell is how it works. This multi-year, multi-generation collaboration across Instinct GPUs, EPYC CPUs, and rack-scale AI systems aligns our roadmaps to deliver high-performance, energy-efficient infrastructure optimized for Meta's workloads, accelerating one of the industry's largest AI deployments and placing AMD at the center of the global AI build-out, said AMD's chair and CEO, Dr. Lisa Su. So we also have some other big breaking news coming out of the semiconductor space. So when you think Nvidia is on the top and top dog, you have competitors like AMD that are, you know, also there. You have Google's TPUs that are also there. You have Amazon with their Trainiums, although they don't really commercially sell their Trainium chips. And you also have, you know, Meta with, you know, designing their own chips. But we have Cerberus coming out with a potential IPO, right? We don't know when it's going to come out. But they are moving towards that direction. And Cerberus, for those who may not be aware, this is a chip company that supposedly rivals Nvidia. All right, it's a private company right now, and they were talking about IPOing last year. They were on the cusp of IPOing, and then they halted it. Right, they stopped it right at the very end. They had to do, I guess, some in-house cleaning or something. And now here they are again, looking to IPO again. This is a huge deal because now you're having another semiconductor company come into the space, especially, it's not a crowded space either, right? It's really not a crowded space. You have Nvidia with the largest of the market share, and you have AMD as another big competitor. And now you're going to have Cerberus that's going to come out. All right. So artificial intelligence chip maker Cerberus Cerberus, which competes with Nvidia AMD, has confidentially filed for an IPO, the information reported. All right. The company has been meeting with potential investors, and the listing could take place soon as April. The news outlet added, citing people familiar with the matter. Previous reports indicated that Cerberus was targeting an IPO for the second quarter of 2026. So Cerberus was recently named by Seeking Alpha's analysts as one of the more notable AI companies that could go public this year. In addition to Nvidia and AMD, Cerberus competes with Grok. Nvidia announced in late December that it entered into a non-exclusive licensing agreement with Grok worth some $20 billion for its inference technology. As part of the agreement, Grok's founder, Jonathan Ross, President Sunny Madra, and other members of the Grok team joined Nvidia. All right. And then last month, Cerberus signed a multi-year, multi-billion deal with OpenAI to provide it with 750 megawatts of computing power. Cerberus has also reportedly been in discussions to raise $1 billion that would value the company at $22 billion. A very, very small valuation. Very small valuation. But this company is supposedly going to be able to compete with the likes of Nvidia and AMD. So we will see when this company IPOs and what it looks like going ahead. Because just competition is good. I still don't think you're going to be able to dethrone Nvidia. But there are some analysts out there that do believe that Cerberus is probably going to have the best fighting chance, even though it's a smaller company, right? A smaller company by size, and not only that, if they're an IPO, smaller just by valuation. I mean, they're going to be. This is really going to be the David and Goliath type of deal. So more to come whenever Cerberus finally announces their IPO. So it looks like I did get that text message, and we are actually close to the top of the hour. So let me check the chats, and then I have to get going here. Right. Yeah, so let's do a leaderboard real quick and see how we're all doing. Boom. All right, so here's the leaderboard for those who are not familiar. Basically, the challenge is you get a hypothetical 100K. You can invest in stocks, single stocks, no ETFs, unless they're spot price or commodity-based ETFs like gold or silver or Bitcoin or copper or whatever, right? Oil, but no thematic, no income ETFs, no dividend ETFs, and no sector-based ETFs, right? So you get a hypothetical 100,000, and if you win this challenge, basically by the end of the year, whoever has the best account wins 1,000 USDC. All right, so hopefully we don't have another Jane Street event where USDC goes to zero. But the winner will win 1,000 USDC coins, which is the equivalent of $1,000. All right. So this was started in the Discord. The challenge is closed. We'll probably do one next year. All right. But anyways, let's move on. So for me, I am up finally back above 90. All right. I had a really decent gain. We have Theta Decay up 94. He had a really decent gain today as well. And we have Velocity Portfolio. Check him out on YouTube. He's at 91K. All right. Up 1.46%. Citizen of the Year. He's all in on Micron. He's actually above 100K. All right. I think, yeah, he's the only account above 100K. So he just like a troll just went all in on MU. All right. So he's doing really well. He's up 2.63%. Super Straight Guy, which we have in the chat, is up 2.39%. All right. 96,000. We have a couple of people hovering around there. All right. We also have Dividend Rocket. Check him out on YouTube. 96,000, up 2%. Bankshot Bobo, shout out to you, sir. 97,000. All right. Up 1.89%. Serial Beggar, up 99. And if you guys don't know his name, his picks were just basically his name, right? So he made a meme portfolio, and it's actually doing pretty well. It's actually doing pretty well. Why even do research, right? Why even do due diligence when you could just spell your name out in stocks and do well? All right, we have OK, who is doing pretty well, actually. I mean, well, he's still at the 96 level. Victor Crooks, his portfolio should be up much higher. Where's Evil Duck? Did I skip Evil Duck? Yes, I skipped him because his account still will not populate. But I know Evil Ducks is probably doing really well. We also have Victor Crooks. Again, his also, I think it's this one. Yeah, Victor, we're gonna have to change this or something at some point. You can leave it, but I think it's not gonna populate this information up here. Yeah, yours should be much more, way more. But anyways, you're doing really well as well, 95. But again, if we factor in the ATCX, it's probably much higher. Pay Me in Dividends, another YouTube channel. Check him out. He covers high yield and ETFs in general as well. But he only went with Netflix, Reddit, Coke, and DTRAF, and he's doing pretty well as well. He's at 99K, right? So as far as the leaderboard is concerned, it looks like we have a Velocity portfolio, unless we have any 89s in here. It looks like we have Velocity portfolio in last. I'm probably second to last. And yeah, so this is the leaderboard, guys. This is how everybody's doing so far. Let's see. So we have from Gabby, why do you buy Nvidia or Platy instead of Nvidia or Palantir? Well, the simple reason why anyone would buy those two over the others is one, they want an income strategy, right? They want an income based ETF. That's pretty much they're willing to give the upside up in lieu for a distribution. Okay, so these ETFs, the NVDY and the PLTY, they're not going to appreciate like Nvidia, like owning common stock, Nvidia and Palantir. But what they will get for that trade-off is a higher distribution, right? They're paying you out the option premium from the strategy. So that is why people would choose those. When you get into income investing, you got to throw out the window that you're going to get any type of growth, right? So the ETFs are trying to fix that. A lot of the ETFs are trying to fix that. They're trying to do all these fancy strategies, puts, calls, auto callables, cover calls with leverage, right? They're trying to do all these other things, right? But most of the time, just owning the underlier is the best way to get growth. But again, when you invest in income-based ETFs, that is the goal, is income. It's not growth, right? You're not going to get a lot of the growth. All right. Let's see. Unless the underlier has some wild swing to the upside, right? Some crazy run up. Unless that happens, then yeah, you can get some really nice appreciation. But again, just owning the spot price, commodity or the underlier by itself, you're going to get the best chance for growth, right? But of course, we know growth doesn't really mean that you're getting paid any type of income or distribution, right? So you have to sell shares whenever they appreciate to a certain level. And then, that's how you could make your income, right? Some people like it, some don't. Some people prefer one way over the other. You can even do both. You can just have PLTY and NVDY, use some of the distribution to buy NVDA and PLTR. I've seen that mentioned 100 times out there in the high yield space. People will just use the distribution and actually buy the underliers, right? The whole goal for them, though, is that they hold these cover call ETFs to generate some type of income, right? So even if they're allocating at, let's say out of a I don't know, if an ETF produced $1,000, right? $1,000, they can use at least 200 of that and buy the underlier. They can reinvest some of the money and then, use the other money to do something else. I don't know, go spend it on a Lambo or something. But that's really it. From Skeptic, why do you buy income instead of growth? Same answer. Honestly, just own a combination of both. There you go, right? One of the more popular strategies is that they'll use high yielders, that is high yield ETF investors. What they'll do is they'll take some of that distribution and reallocate it to, safer indexes or safer ETFs or stocks, right? They'll just buy, the SPY or the triple Qs or something like an SMH or a VGT or, I was using a lot of my distribution to buy Bitcoin or IBIT, right? IBIT shares. So that's also one way you can play that. Sergio, hey, welcome. What's up, man? Okay. Let's see. All right. Well, ladies and gentlemen, I think that's going to do it for me because I really got to get going. I'm burning time here, but I appreciate everyone joining me for this stream. Hope you guys found it at least a little valuable, a little informational, and definitely, hopefully, you found it somewhat valuable. All right. Try to throw in a little bit of entertainment here. Try to throw in a little bit of entertainment here. But anyways, guys, appreciate you guys joining me as always. All right. Enjoy the rest of your day, your evening, your afternoon, wherever you're at in the world. And as always, I will see you guys in the next stream. Just one last point. I don't think I will be streaming tomorrow because I will be traveling. So we'll pick it up again either on the Sunday night stream, maybe. All right. Because I think I'll be out of Dodge for a little while. So anyways, guys, you guys take care and be safe out there. And I'll see you guys in the next stream. Take care.